Hello and welcome to the trade setup. In this video we are looking at silver. It is time for another update, and today we'll also be taking a good look at gold because funnily enough it might be a better indicator of our overall expectations for silver than the silver chart itself. Now, it is quite impressive how nicely these structures have followed our expectations since the previous video. Firstly, we expected on the silver chart to form, after this initial 5V move to the upside, of course a 3-wave correction, but then at least another 5V move to the upside. This has followed through nicely. We have now a 3-wave pattern in place, and at the same time we have been expecting on the gold chart to form one additional low within this orange scenario, while on the silver chart we had identified more strength at that point in time. And we did mention specifically in the previous video that we could easily see it form a higher low instead. Now, funnily enough, the gold chart now has a more reliable pattern to be tracked, and I will get to it in a moment, but let's actually start with silver. Let's actually focus on silver because I know this one gets a lot more interest. And by the way, if you're only focusing on silver, you're missing out on so many great opportunities we have available in the stock market. It has been very good to us lately. It has provided many setups, and the potential is, in my opinion, oftentimes significantly higher than we have here for silver. And this doesn't mean I wouldn't be still focusing on silver. I own silver, but diversification is part of risk management, and by watching these videos, you would also learn how to safely get exposure to these other opportunities. Now, let's provide some context for this chart because this setup has been great. It's worked, it's wonderful, but we need to understand what we expect to come next, and for that we need to go first on the larger time frame. So, for context, on this chart we are looking at a larger diagonal structure in my opinion. This means that we would expect within this as a larger wave 3 to the upside to build an ABC structure, and based on this interpretation, I would primarily expect to still form new all-time highs within this movement to the upside, where I actually would prefer for a wave 4 bottom to be in place. Yes, I am still looking for one more high within a wave 5, and given that this wave C of this larger wave 3 is an ending diagonal, I am looking for this wave 5 to be built in 3 waves. I cannot tell you at this point how large the first of these 3 waves would end up being, but I will be tracking it closely, and if we get more clarity, we will manage to get a better idea. But this is actually where gold comes in quite useful because the overall structure on that chart is significantly more clear. The setup has been significantly more reliable in my opinion, at least from the large time frame, and the opportunity is there. Certainly, I would expect silver to move along with it, of course with significantly more volatility. Now, since I expect this wave 4 to be complete, I would have to consider this to have been a WXY pattern. Ideally, we wouldn't extend any lower. Ideally, we would be building a wave A to the upside at this point, which I can even label. And this as a wave A, unfortunately, doesn't offer great confidence because the wave A can be a 3-wave pattern, but just as well, the wave A could work out as a 5-wave pattern. Since so far I only have 3 waves to the upside in this movement, I can track either a leading diagonal within this wave A, which means a 5-wave move to the upside, but within which each subwave is expected to be formed of 3 waves. So we have here this wave 1, as I was saying, within 3 waves. I would have here a wave 2 correction, already as presented in 3 waves, and I would expect within a wave 3 to form a 3-wave move to the upside. Let's label even that. But then this as a larger wave A can also work out as a 3-wave pattern only. That might become an issue later, but since I don't have even these 3 waves to the upside, I would expect to form at least one more high within this structure. So I would have the possibility to track this wave A as a 5-wave move to the upside, where the wave 3 is expected to be an ABC pattern, and then I have the possibility to track this larger wave A as a 3-wave move to the upside, where I expect the next wave to be a wave C instead. Since within a wave C we always expect to build a 5-wave pattern, we should get a pretty decent idea of which type of wave A we are really looking at, but only after we have managed to extend to higher prices within this structure. Then, depending on which type of pattern plays out, I would also have primarily certain expectations for each of these waves to the upside. So, within a wave 3, we have an ideal target at the 138.2% extension of the wave 1. That sits at $109, right? Then, within our minimum expectations, which would still be a wave C, I would be looking for the ideal target to be at the 100% extension, $97 instead. This is actually quite an important level, and even if it manages to push through it, even within this as a wave 3 in green, I wouldn't be surprised to find some rejection here, some resistance, as this is where we have found our more substantial top in this previous attempt to extend to new all-time highs before actually forming a lower low. Now, we could go on about this for a little bit longer, but I believe we have covered the essence. Within this wave C, this is an ideal target. We don't actually need to get there, but we also don't need to stop there. It could ultimately reach even the 138.2% extension of the wave A. And at this point, there is actually no confirmation that a bottom is in place within this as a wave B in orange or a wave 2 in green. We still have this yellow area of support we need to keep in mind that could still see a reset. We could have here something like a larger A, B, C correction where we realistically have to allow a retracement as low as the 78.6% retracement at $65, and unless we get a sustained break below that, we cannot expect the probabilities for this extension to higher prices to actually change. Now, beyond what we have been tracking as a potential 3-wave move to the downside complete, as we have shared in the beginning of this video, we have also been looking at this as a potential 5-wave move to the downside in the blue interpretation, where we have the threat of actually having a wave A in place. And this isn't necessarily my preferred interpretation. I do not really like too much this 5-wave pattern count, but I do have to mind it. I do have to watch out for the resistance levels for a potential wave B, where if we actually get a sustained break above the 78.6% retracement, it would be a signal that even more likely we already have a bottom in, that it is even more likely to extend directly higher. Now, in this wave B in blue, we primarily expect to build a 3-wave pattern, and since we only have 3 waves to the upside in this structure, it isn't going to be a zigzag, meaning this doesn't need to build a wave C. We need to be quite cautious as the risk is substantial, since we do have these 3 waves that are expected within a correction in place at this point, but primarily my focus would still remain on the idea of a wave C to be taking place in this area. So I would primarily be looking for continuation to higher prices within the current structure, where I have this as a potential wave 1 up, wave 2 down, and I have to actually allow this to be a wave 3. I have to allow the possibility of this being an ending diagonal, because if I go here into a slightly smaller time frame, it is rather difficult to trust this movement to the upside to be anything other than a 3-wave pattern. In this case, I can allow a deeper retracement within an internal wave 4 in this area, where as long as I am still holding the 61.8% retracement, I can actually still expect to form one additional high. However, given that within the correction that has so far happened internally within this structure, we do not have too nice of a match with what happened in a wave 2 correction in this area, I would still primarily expect either a reset within this as a wave 4, meaning we aren't having this wave 4 bottom here and this wave 5 to likely be extending directly higher, but either we form a larger correction, we form here internally something like an A, B, C structure, or this wave 3 would still be extending. As I was saying, this is going to be a rather difficult pattern to track. It is also perfectly possible that instead of having the bottom of this correction here, it might have been this one, and we are building a 5 move to the upside in this way. But I believe this actually doesn't change much in terms of what support levels we would need to track. We would still want to have the deeper levels of support that would allow us to still look for continuation to higher prices. But this is not going to be an easy area to trade. We need to be fully aware that if gold manages to build a more reliable pattern and manages to extend higher and higher, it is likely going to drag silver along with it. Nonetheless, in terms of an ideal target for a wave C, in this movement to the upside, I would have to watch out for the 100% extension of the wave A, and that sits at $78.9. This does not mean we need to form a top there. In fact, based on the pattern that I have on the gold chart, which I will move to in a moment, I can very easily expect these structures to build something significantly more bullish. So, on the gold chart, we had identified this wave 1 to the upside, where I can actually track an initial 5-wave pattern, where I can actually consider that a more substantial bottom would be in place since we have a 3-wave correction down. We have formed the expected low since the previous video, and we have reacted very nicely from this support zone, actually creating what can be even tracked as an impulse so far to the upside. And if we manage to build internally an initial 5-wave pattern, I have to account a confirmation that a more substantial bottom would be in place. I have to account a larger 1-2 setup where we would have another opportunity. And I don't always expect this to work out in this manner. I don't always expect to get this additional confirmation. It sometimes does happen that we just form a series of 1-2 setups, or even this would be a 1-2 setup, and it starts a very strong wave 3 to the upside that goes on and gets very few and shallow retracements. For context, on the large time frame, we are tracking a wave 5 within the idea of an impulse on the gold chart. As I shared even in the previous video, in commodities, it is actually quite common to form significant extensions within the wave 5. We have an example here within this as a wave 3 to the upside. The wave 5 had become quite extended. Even within this as an internal wave 3, this wave 5 had become quite extended. Yeah, actually even within the wave 5 of the wave 5, we see it follow the playbook. This isn't a guarantee, but it is something I'm watching out for. And since I might have a bottom within this as a wave 2, in yellow, I can actually even provide to you an ideal target for this wave 3 to the upside, and that is the 138.2% extension of the wave 1. Well, that is at $5,800. That would already take us to new all-time highs, and to be clear, it doesn't need to stop there. So, as a summary, we have provided this trade setup. It has followed through so far, and we are looking for the next confirmation if it is given. But if not, in an ideal structure, we still expect substantial upside to be ahead. And also for the gold chart, it does apply that there is the possibility that this wave 2 gets a reset. We don't actually need to have a bottom in place, and if it actually fails to hold internal levels of support, it would be a pretty decent warning sign that this structure isn't going to manage to follow through, isn't going to manage to extend to even higher prices. So for now, I would be paying close attention to the 50% retracement in a potential impulse formation in this area. Yeah, something like that could be the play. And I would be watching against $4,644 for continuation to higher prices, where a sustained break below this level would be rather an indication that quite possibly this structure is going to get a reset within this wave 2, or at the very least, isn't going to provide a reliable pattern in the structure we are currently tracking. And for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoyed the content and want to support it directly, check out the channel membership, and I'll see you in the next one. Bye bye.